Weaker commodity prices and concerns about ongoing trade conflicts with key ag export customers led to a sharp decline in producer sentiment during the month of July. The largest one-month decline in the ag economy barometer since the data collection began in October 3 years ago, triggered by declines in both producers' perception of future economic conditions and especially the current economic conditions, where 4 out of 10 producers indicated that they thought it was likely that new crop corn and soybean future prices will trade below $3.25 for corn and $8 per bushel for soybeans between now and fall. Those price levels may cover some variable expenses, but would fall very short of covering the fixed and overhead expenses on many farms. Now, 7 to 10 producers expect the trade conflicts to reduce their net income in 2018, and over 70% of those producers anticipate a trade-related income reduction and expect the reduction to exceed 10%. Now, the barometer is the result of a collaboration between Purdue University and the CME Group. It provides monthly nationwide measures of the health of the U.S. ag economy. Now, the weak ag economy outlook did lead producers to have a more pessimistic view of farmland prices in the year ahead, in addition to providing them with a more negative perspective on making large farm investments. 31% of producers said they expect to see lower farmland prices over the course of the next year as well. Now, that compares to just 21% of producers expecting to see lower farmland values back during the May survey. It's kind of interesting, and it is the first time since before the Trump election that we've seen some numbers this low. The July survey also asked producers whether or not they expect trade conflicts to reduce their farms' net income. Responses indicated that many farms are already feeling the impact of reduced ag exports, as 70% of producers said they expect reduced net income as a result of trade conflicts. And then there was a follow-up question posed only to those expecting their incomes to decline. Producers were asked by how much they expect their net income to decline, and over 70% of respondents expect their income to decline by 10% or more as a result of trade conflicts. The percentage of producers that think a trade war is likely also increased in July compared to both April and March. And 54% of producers said a trade war that reduces ag exports is likely. And that's a higher number than both March and April. And with another Ag News update, I'm Tony St. James.